Hi guys. Today we will analyze Intuit stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. However, recent evolutions are not positive. The long-term trend is still negative, but the short-term trend is neutral. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $390 and $360. Next strong support levels are around $290, $260 and $190. Strong resistance levels are around $427 and $490. Next strong resistance level is around $530. In the last month the stock has been trading between $355 and $420 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.1 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since November 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 19% per year, for last 5 years. We see that the average profit margin of the stock has been around 21% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 142% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Intuit company: bad, average, and good. First scenario. Intuit will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 12%. Future profit margin would be a low, 19%. Future free cash flow to net income rate would be a low, 130%. In this case, the fair value of the stock today would be $227. Second scenario. Intuit will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 13%. Future profit margin would be average, 20%. Future free cash flow to net income rate would be average, 135%. In this case, the fair value of the stock today would be $256. Third scenario. Intuit will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 14%. Future profit margin would be high, 21%. Future free cash flow to net income rate would be high, 140%. In this case, the fair value of the stock today would be $288. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 8.84. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Intuit, analysts forecast growth rate around 14% per year in next 5 years, and future P/E around 32. Again, I will use 3 different scenarios for Intuit company: bad, average, and good. First scenario. Intuit will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 12%. Future PE would be low, 18. In this case, the fair value of the stock today would be $187. Second scenario. Intuit will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 13%. Future PE would be average, 21. In this case, the fair value of the stock today would be $237. Third scenario. Intuit will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 14%. Future PE would be high, 24. In this case, the fair value of the stock today would be $293. As you can see, today the stock is overvalued, $404, even if we expect the company's high performance in future. Both the profitability and the financial health of Intuit are neutral. Nothing too spectacular is happening here. Also, the stock is expected to show a medium growth in revenue in the next 5 years, 12 to 14% yearly. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since November 2021, and it can go lower, before it recovers. I may consider buying the stock, when the stock drops below $280. Company's strengths. Intuit is an American business software company that specializes in financial software. Its products include the tax preparation application TurboTax, personal finance app Mint, the small business accounting program QuickBooks, the credit monitoring service Credit Karma, and email marketing platform MailChimp. Credit Karma, a consumer financial technology company, with more than 110 million members, has opened up significant opportunities for Intuit to monetize new and existing customers. The MailChimp acquisition provides new growth opportunities and operating synergies. It is also helping to offset the inherent seasonality of the tax prep business. Intuit is moving to a virtual model, enabling online and omni-channel commerce, accelerating its own money offerings, such as Mint, and helping mid-market customers move to the cloud. QuickBooks should continue to see revenue growth from Intuit's growing ecosystem capabilities. Operating expenses should decrease as a percentage of revenue, as the company realizes synergies between links among once disparate offerings, and benefits from scale. Intuit's return on assets of 9% and profit margin of 19% are amongst the best returns in the industry. Intuit's return on equity of 15% is in line with the rest of the industry. Based on estimates for the next 5 years, the company will show a medium growth in revenue. The revenue will grow by 12 to 14% on average per year. The earnings per share is expected to grow by 10 to 15% on average over the next 5 years. Risks. The pandemic and the overall health of the economy. A reduction in employment and decreased spending on tax preparation services could slow the company's growth. Acquiring Credit Karma represents risks including potential for culture clash, disappointing returns in the acquired business, and potentially overpaying. Intuit's small business group, based on QuickBooks and related accounting products, faces risks from inexpensive generic ledger sheets, and rudimentary accounting programs available online. TurboTax faces competition from tax stores, free online software programs, and rivals such as H&R Block's Tax Cut. Tax preparation overall faces risks from government efforts to reduce tax complexity. Some countries outside of the U.S. automatically generate citizens' tax files. If the U.S. adopted a similar program, TurboTax business could face material headwinds. Intuit could also receive pressure from the IRS to include one's premium features in its free tax filing software, weakening premium software sales. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.